Good afternoon. It's Patrick Dwyer and Greg Poole, and we are here to talk about 8 trends that will disrupt the economy by 2027.
Yep, these are some big topics. Most people look at these, I'd say, one at a time, and we think that's a mistake. Each one, creates conditions for the next one. And so, when you zoom out, there's a trend here underneath all of them that we don't think anybody's talking about.
Yeah. So I wish we could look at them one at a time, but it's not, it's coming fast.
Yeah.
Well, we think the most important one, so we're going to start at the beginning, is, ChatGPT hit 100 million users in 2 months. I mean, TikTok took 9 months, Instagram took 30, Uber took 70. I mean, no product in history has scaled like this. And as of December 2025, ChatGPT had 900 million active users. So it's competing with YouTube, Facebook. Like, these companies never had like disruptors
Yeah.
around them. Never, never. Like,
Yeah.
no one's competed with them before.
And I'd say not just on the consumer side, this is kind of a real-time business spending. So we have business spending data from Ramp. And as of January of this year, nearly 47% of US businesses are paying for AI tools. So they're not experimenting, they're paying. And that was under 7% 3 years ago.
Yeah, it's crazy.
And so, if you look at where it's spreading, you've got manufacturing at 47%, construction 32%, hospitality 25%. These aren't like what you imagine as bleeding edge, tech areas. This is not just a AI tech thing. This is an every industry story right now.
Yeah. I mean, we've talked about this with the clients many, many times because we have a lot of tech entrepreneurs we work with. But why is it moving so fast? And it's moving so fast because a year ago, the cost to use tokens, at the same level of intelligence was like $29 per million tokens. And today it's 10 cents. That's a 99% drop in 12 months. I mean, this is like mind-blowing stuff. When the cost drops like that, adoption doesn't grow. It explodes. Like, it absolutely goes boom.
Yeah, that's 4 times faster, I think, than the internet. And we all know what the internet
Yeah,
is.
I mean, you don't need to understand the scale of, I don't need to show you a scale on this one, but we will anyway. 2.5 years after the launch, AI chatbots have reached 22% penetration of smartphone users. That's incredible.
It is.
The internet at the same point was like, I think it was like 4 or 5%, something like that.
Yeah,
So it's crazy.
that's crazy. So that's the first. Let's maybe move on to number two, data centers. Okay, so we hear about data centers all the time. AI, is getting smarter, it's cheaper, it's everywhere, but obviously that computational power needs to happen somewhere. And, right now the world doesn't have enough data centers to keep up. So if we look at this data from ARC, from 2012 to 23, data center investments grew about 5% a year, very steady and predictable. And then when ChatGPT broke, the line broke. And since 2023, that has now jumped to 29%.
It's just normal, 5% to 29%, just like that. I mean, you think about like what construction project is moving this fast in the history of the United States? Like there's been none. We haven't like literally after World War II when we built the highway system, this is the last time something like this happened. And that was epic and that led to incredible things, but it's really kind of nuts.
Well, this is, I guess, the next highway system, right? And so, if you look at who's writing the checks to build this highway system, it's all the huge hyperscalers, Amazon, Meta, Alphabet, Microsoft. In 2023, their combined capex was 150 billion, and 2025 it crossed 350 billion. And for 2026, it's projected to be over 600 billion. So, 4 companies spending more on infrastructure in a single year than most countries spend on their entire military.
Yeah, I mean, we've been investing in this space through Blackstone and some infrastructure funds that are investing in this space. And they're not doing this, by the way, because no one's investing in data centers because they want to. I mean, they're investing in data centers because they have to. If you don't have the compute, you have no product.
Yeah.
I mean, you cannot do really fast work on Claude unless they have you get massive amounts of data center access.
That's right. That's right.
McKinsey says right now that the world needs roughly $6.7 trillion in data center investments by 2030. 6.7 trillion. Let me just make sure that was not a typo.
Yeah.
Like that's a lot. That's a combined GDP of like Japan, Germany, two rather large companies. And that's the price tag to build the physical layer
Yeah.
underneath the AI. So
Yeah.
that's just like, so that's the roads and the bridges. of AI right there, right? Because data is the most important thing.
And so, look, all that infrastructure will need power. And Goldman estimates the data center electricity consumption is going to increase 175% by the end of the decade. And so, this was demand that was essentially flat 5 years ago. And now with AI stacking on top, it's heading towards, 1,200 terawatt hours by 2030. And that's new demand that didn't exist 3 years ago,
I mean,
which,
it
yeah,
it is I mean, if you think about, like, the national conversation about energy, like, we were restricting energy use and focusing on efficiency, like, 5 years ago.
yeah, it's a different
Now we're
conversation.
like, "Boom, like, we gotta go fast," and, like, forget about all that other stuff, like, just go,
Yeah.
like, because it's actually a national security issue
Yeah.
as well.
Yeah, which that's kind of our third topic, which is distributed energy. And to your point, you know, nobody's going to build these things if we don't have enough energy to power them. So, it becomes not just a tech story, but it's an energy story. So, if we go back to U.S. electricity consumption, if we go back to say go back to 1990, from 2005 to 2020, demand was essentially flat. You had 15 years of almost no growth. And then after 2020, it jumps to 1.7% per year. So, that's actually a very big move in the numbers we're talking about. So the grid went from flat line to climbing again, and it's not slowing down.
Yeah, I mean, imagine, like, if you were in, like, the utility power business, it was, like, the most boring
Yeah.
business in the world, and now suddenly you're in this hot growth business. Like, it's crazy, and so this is every type of power generation being added to the grid globally since 2019, by the way. That yellow area in the chart here is solar, and it's eating up everything else. In the first half of 2025, renewables produced more electricity than coal for the first time in record history.
Yeah. Yeah, and it's not just a US story. If you look at, I think, 20 African countries set records for solar panel imports in the past year, and these are countries that never had a reliable grid. They're not upgrading old infrastructure, they're just skipping it. And the same thing happened with mobile phones and landlines.
Yeah, and it's really because look, the cost of solar is really dropping, so it's scaling. It's scaling. You're going to see the same thing happen in electric cars. It's like they're going to get cheaper and cheaper and cheaper and more used, and so forth. But every major energy transition, coal to oil to gas, push costs down. Solar continues the pattern. It's now the cheapest source of new electricity in the most of the world, which is kind of amazing, and incredible. And of course, it's great because
Yeah.
the sun keeps going.
Yeah. Yeah.
So
We hope. We hope. So so the world needs more power than the grid can deliver, but what if you didn't need the grid? And that takes us to kind of our fourth, which is reusable rockets. So this chart here, it shows the cost to put 1 kilogram into low Earth orbit, and in the space shuttle era, that was over $54,000. SpaceX Falcon 9 brought it under $3,000, and then reusability kicked in, and now it's below $1,000. So that's, again, a 95% decrease in cost. It follows the same curve we just saw in solar, but Starship is targeting under $200 per kilogram. $200.
it's just like mind blowing stuff, and you can see what cheap launch unlocks. And SpaceX put over 3,000 metric tons into orbit in 2025. That's 167 missions in a single year. One booster has flown 32 times.
Wow.
Same booster for reuse. I mean, to me, that just blows my mind. The result is over 9,000 active Starlink satellites. SpaceX now operates roughly two-thirds of every satellite in orbit. None of that happens if you're throwing away the rocket every time.
That's
So
right.
just this one little innovation just disrupted the entire aerospace industry.
Yeah. And so this is where it connects back to everything we just covered. So Google ran the numbers on what happens when launch costs hit $200 per kilogram. And at that price, you can put solar panels and compute into orbit. It becomes as cheap as building a data center on the ground, but with 8 times more sunlight.
Yeah, I mean, it's still more expensive today, but the total cost curve is heading to that crossover, and the ground-based alternative is getting more expensive as everyone fights for the same power and the same land. So,
Yeah.
like, space is the next frontier for data centers and power generation.
I think you hear these things and people, like, it seems so far away, but if you look at the math, it's really where we're heading.
Well, it was far away. Everything was far away our whole life, and now it's not.
Yeah.
Like, that's kind of like, now all this stuff that you've dreamed about, you've talked about is here. As I always say, like, and my Tesla drove me to work today. Like, so like, again, it's here. So the next thing we're going to talk about is humanoid robots,
Yeah,
which
it's one of your favorites.
it's, yeah, I mean, look, they're supposedly coming next year. So we got intelligence, the infrastructure, energy, but someone still has to do the physical work, and the workforce is shrinking. This is the U.S. manufacturing labor surplus going back to 2000. After COVID, it flipped negative, and Goldman projects the shortage widens to 2 million workers by 2030.
Well,
So there's no hiring program or training initiative that closes the gap
yeah,
that size on
yeah.
that timeline.
Yeah, I think you're seeing the same response everywhere. So China is installing nearly 300,000 industrial robots a year. It's roughly 10 times the US, but I'd say a decade ago they were at the same level as everyone else. Now it's not even close. I mean, they are moving fast. You look at Amazon, they're running over 6,400 robots per 10,000 workers. This is something that's happening globally across the industries.
Yeah, and these are mind-blowing numbers. I mean, every one of the robots is totally specialized. They're fixed arms, conveyor belts, warehouse shuttles, one task, one environment. The next wave is general purpose robots, where these are the humanoid robots that
Yep.
basically they built to look like a human, um, that can work in spaces built for people and switch between tasks that a person does. That's why that makes sense.
Yeah.
And they're using the same the technology to drive a Tesla is basically like human eyes. It's just basically looking at the world the same way we do, and sort of they're training these models to react like we do. It's really cool.
The models, I mean, ARC mapped the compute scaling behind Tesla's, full service driving. It applied the same trajectory to Optimus, and I think the pattern still holds, which is the more, AI compute you throw at it, the performance climbs on the same curve. So, they project the initial production in 2026 and human level task proficiency by 2028.
Yeah, I mean, the economics are crossing over like really, really quickly. I think the average US worker cost employers about $46 an hour.
Yeah. So we got robots entering the workforce, but they're also getting behind the wheel.
Yeah, this is one of my favorites because I love my Tesla FSD, and
Yeah.
I think it's incredible. I think it's going to totally change our life. We're going to do another video on the impact of, by the way, of driverless cars on where we live in
Yeah.
Miami.
Yeah.
That's coming. So this is the cost of moving 1 mile, and I always bring this up. A human-driven Uber costs roughly $2.80. So owning a car, 80 cents. At scale, a robot drops that to 25 cents. That's a 91% drop from a ride hail. Let me say that again, 91% drop, and less than a third of the cost of owning a car, right? At that price for people in cities, owning a vehicle stops making sense. So,
Yeah.
I mean, I pay $120 when I land at in New York at LaGuardia
Yeah.
and go to my apartment on the Upper East Side. Think about that.
Yeah.
Goes from $120 to it's 4 miles. Like it's basically 4 or 5 miles. I mean, that's gonna get really cheap.
Yeah, it needs to. I mean, it's already happening. I mean, Waymo went from 0 to almost a quarter of the rides in San Francisco in 2 years. It overtook Lyft entirely, and they hit 450,000 paid rides a week by the end of 2025, and that's with a fleet of 2,500 vehicles. So it's scaling.
Yeah, and this is really where the data matters. Waymo publishes, like, crash data across 127 million fully autonomous miles. Let me say that again, 127 million fully autonomous miles. Intersection crashes are the deadliest type. They're down 96% versus human drivers. So pedestrian injuries down 92%, across every statistically significant category, dramatically safer. When I talk to my friends about getting into a driverless car, they're always like, "Oh my god, I don't trust this."
So
I'm
the
like, You're
Matrix.
actually like taking
Yeah.
way more risk driving
Yeah.
yourself, and you need to deal with that fact."
Yeah.
And if anyone's ever driven with me, they already believe that because I'm a terrible driver.
The good news is, the facts are on the side of robot driving safety, and so over time, I think people will just come to the same conclusion. But you can see how fast Tesla's launched its robotaxi service in Austin in mid 25. It's scaling nationally. So between Waymo expanding in 20 cities, Tesla pushing its entire fleet, the race is on, and we know the costs only go one direction, and that's down.
Yeah. And so every trend has been about reshaping the physical world. The next one we're going to talk about, digital assets, is about reshaping money,
Yeah.
which is like, I mean, again, this is financial services, 20% of the value of the US stock market, and they are going to get disrupted
Yeah.
right now.
Yeah. So, I mean, this is we're showing a chart here of stablecoin transaction volume and comparing it to Visa, PayPal, and global remittances. So by the end of 2025, stablecoins were processing 2.3 times their combined volume. So this is not crypto exchanges. This is kind of real money moving between users. Supply grew 50% in a single year from 210 billion to over 300 billion.
So guys, it's just, I mean, these numbers are just so big. I mean, it's just not payments, it's assets. In 2025, Bitcoin ETFs and public companies grew their holdings from 9% of total supply to 12. This isn't speculation anymore. Like, this isn't just like, the dumb kids in Miami with this stuff. That everyone from corporations to sovereign wealth funds, they're buying digital assets.
Yeah. Yeah. They're asking how it fits in the portfolio. What role can it play to hedge? You know, they're asking whether to miss it. Now it's a pullback, whether it's an opportunity to buy it. But the curiosity has matured, and the institutional flows of what we're seeing in the chart, that's what's driving it. When BlackRock's running a Bitcoin ETF, the conversation has really changed.
Yeah, we can all remember how they trashed Bitcoin forever, and now they're like, both, it's kind of hilarious
Yeah.
that all the large institutions that have a vested interest in no change are never for these things until they have to be.
That's right.
And you should remind yourself of that. People got a lot of bad advice from these big institutions. I worked for one that wouldn't allow you to buy Bitcoin. I bought it anyway, and made a fortune on my Bitcoin, and my clients all would have too if I'd been allowed to put them in it, but I wasn't.
Yeah.
It's really pisses me off to this day.
Yeah.
So money is totally going digital, and there's a reason it's moving fast, and it's not just technology. It just happens to be the monetary system underneath all of this. Global government debt just crossed $100 trillion. This is, people are talking about this all the time. That's roughly 100% of global GDP. So right now, so governments, are very, very much debt. In 1999, it was 20 trillion. So this is really mushroomed. And the U.S. alone is running $2 trillion annual deficits. These are really big numbers. And the net interest on the debt just passed $1 trillion. So half of the debt is the debt.
Yeah.
And it's now the single fastest growing line item in the federal budget, and nobody seems to care.
Yeah. Yeah. And look, that's why, well, I mean, that's why the debasement topic has caught fire is, this is the chart. And, that's the reason someone would be interested in gold and silver, and Bitcoin as a long-term store of value that kind of isn't tied to fiat currency.
Yeah. So what do? You can't cut it. The spending is sort of structural entitlements, healthcare, interest, and the debt. You can't tax your way out of it. Europe already collects 35 to 40% of GDP in taxes. I mean, Europe basically takes away all your money right now, and that hasn't worked well. Their debt just keeps climbing, and they keep getting poorer, actually. And you can't inflate your way out of it if you're crushing the people who are getting squeezed, because the political system will have a reaction to it, which it has.
Right. That's right. And that's why that, frankly, there is no easy answer, and that's kind of the point, and that's why this is trend number 8, not just a footnote.
Yeah, it's just, and this is a trend that we don't have a prediction here, because it doesn't seem to be stopping. Hopefully this technology will help governments to become more efficient, but my guess is that will only happen when they're forced to. Chapter 9, our final chapter.
Why don't you tell us the last one, the reveal?
So this is 8 trends, but now we're going to tell you number 8. Drum roll, number 9. So the blue lines, TV, software, cell phones, down 40, 70, almost 98%. Those are the sectors where technology competed freely. Every trend we just discovered could be grouped with blue lines. Now you look at the red lines, hospital services up 244%. Why? Because there's no competition here. College tuition, 185, childcare, 133. These are the sectors where government subsidizes demand, restricts supply, protects the incumbents from competition. The trend 8, sovereign debt. The government spends more, borrows more, and everything it touches gets more expensive.
Yeah. And so the 9th trend is what happens next, because AI is entering healthcare, right? It's entering education. It's entering transportation, distributing energy. It's entering housing, right? These blue lines are heading straight for the red lines.
Yeah. And that's really the story. These are 2 systems that are on a collision course. Technologically, deflation meeting government inflation. Let me say that again. Technological deflation meeting government inflation. Right. In other words, highly regulated businesses, right, have not been good for Americans. They've actually been terrible. And unregulated businesses like these big tech companies, which people complain about, have been incredibly deflationary and added all the wealth that we have came from them.
Yeah. Yeah.
From and basically the regulated side of our economy sucked it out.
Yeah.
Right. And so now they're going to have real competition. And so they're onto this collision course and, this deflation in an inflation story. And we think it's probably the most important thing to understand right now, not just as an investor,
Yeah.
but just anyone trying to make sense of what's happening.
Yeah. Look, we talk about it all the time. It has massive societal, political, and financial implications. So it's something we think about and talk about a lot. It's why we're doing this video, because we want to show you how we're thinking about it. And look, we appreciate it if you made it to the end and you think this was helpful. We're early on in this channel. We'd appreciate your support. Please feel free to share it with someone. That's the best way to help us.
Yeah, and really, like, you need a plan to deal with all of this, and we have a plan. We have a way of addressing these things, addressing these risks, addressing the taxes, addressing the things that are important to you, that you can get to your goals with all this craziness going on. And it's not about charging you more money. I can promise you that.
Yeah.
There's deflation in our business, and we are basically disruptors in our space. Call us.
Yeah.
Have a
Love to
conversation
talk
with
to
us. We'd love to chat.
you. Thank
Thank
you.
you so much.